Hi everyone. Today we're going to talk about the company UiPath. The ticker is PATH, Path. One point it was one of the Cathie Wood's favorite stock, so it became famous. But right now, the ARK investment has been reducing the shares of the UiPath because of this company's weak business guidance. However, if you see that the company's earning and business model, it is odd. It actually they were making good money, and the company's business model became stronger than before, and the company turned to the profitable company. But the strange part is the stock price is not moving up. It's stuck in between $10 to $12. Even this AI rally pushed the many stocks going up. So today, let's check what UiPath actually does, how much the business has improved, and why the stock is not moving up, and what I think is a realistic fair price by the end of the year. Before we start, I post the breaking market news every morning on my YouTube Shorts. I strongly believe this will help your investment decisions. So please check them out and subscribe to the channel so you don't miss any of them. Okay then, let's get started. First, let me explain what UiPath does in a simple way. UiPath is a business automation software company. In the past, it was mostly known as an RPA company, robotic process automation. In simple words, UiPath helps companies automate boring office work that people use to repeat every day. For example, invoice processing, customer data entry, Excel work, connecting internal systems, and making reports. These are the kind of tasks UiPath helps companies automate. But now UiPath is trying to become more than just an old automation company. The direction of the company is to become a business automation platform that connects the AI agents, software robots, people, documents, and internal company systems. In simple terms, AI may make decisions, but UiPath helps those decisions get done safely inside a real business system. That is why some investors believe UiPath could become even more important in the AI era. And I agree with that. And the recent earnings were not bad at all. Actually, if we only look at the numbers, they were pretty strong. This quarter revenue was $480 million, up 17% year over year. ARR, which is the company's recurring revenue base, passed $1.9 billion, up 12% from last year. And the important part is this company is now making money. GAAP operating income was positive at $28 million. Non-GAAP operating income was $92 million. Operating cash flow was up also $132 million. So naturally, we have to ask this question. If earnings are improving, if the company turned profitable, and if UiPath has a chance to become a key business automation platform in the AI era, why is the stock still stuck near $11? In my view, the biggest reason is employee stock pay or stock based compensation. This is the biggest risk for this company, I think. This quarter, UiPath stock based compensation was about $53 million. If we simply annualize that number, it becomes more than $200 million a year. But the company's full-year non-GAAP operating income guide is about $430 million. So the stock pay going to employees is almost half of the adjusted operating income that the company expects to make this year. This is very important. If you only look at non-GAAP numbers, UiPath looks very profitable. But from the shareholders' point of view, the company keeps giving out shares to employees. Even if the company buys back stock, a lot of that money is not really going back to shareholders in an aggressive way. It is being used to offset the new shares given to employees. In simple words, the company is making money, but a large part of the value is being used for employee stock pay and to defend against share dilution. That is why the market is not giving this company as much high valuation yet. Revenue growth of 17%, ARR growth of 12%, positive profit, and better cash flow, those numbers are good. But investors are asking one key question. Okay, the business is better, but how much of this profit will really stay with shareholders? Right now, UiPath has not fully answered that question. The second reason is growth. UiPath is clearly growing, but in the AI market, investors want much faster growth. When people compare UiPath with names like Palantir, Nvidia, or Broadcom, UiPath's 12% ARR growth can look a little boring. The company is improving, but we still do not have clear proof that AI is making growth explode again. The third reason is that the AI story is not fully proven yet. UiPath's idea makes sense. If big companies want to use AI agents in real world, they need security approval steps, record, and links to internal systems. This is where UiPath can play an important role. But the market is still not fully convinced. Investors still want to know whether UiPath can really become a core automation platform in the AI era, or whether it is just an old RPA company using the AI story. The company still needs more proof. Now let's look at valuation. The stock is trading around $11. The company's full-year non-GAAP operating income guide is about $430 million. If we include interest income, taxes, and the real effect from stock pay and share dilution, I think a fair EPS estimate for this year is around 65 to 70 cents. So at the current stock price, the forward P ratio is about 16 to 17 times. That is not expensive. But because growth is still in the low teens and because stock-based compensation is still very high, I also do not think it is extremely cheap. My realistic fair price for the end of the year is around 14 to $15. At 14, the forward P ratio would be around 20 times. For a software company growing ARR around 12% with a lot of cash positive profit, but also a heavy stock pay burden, I think that is a fair level based on the current situation. If growth goes back to 18 to 20% and if stock-based compensation start to come down, then market can give UiPath a higher value. But based on the current numbers we have today, I do not think it is easy for this stock to go up a lot this year like other AI stocks. So here's my conclusion today. UiPath is a really great company and the business is getting better. It has a lot of cash, it turned profitable. And as we move deeper into AI era, UiPath has a real chance to become an important business automation platform. So this is definitely a stock to watch over the next few years. But because employee stock pay is too high, I do not think we should expect this stock to rise sharply this year like other AI stocks. So instead of thinking about UiPath as a fast moving AI stock, I think it is better to view it as a slow but improving software turnaround stock. For now, my realistic fair price by end of the year is around 14 to $15. To go above that, UiPath needs more than just profit. It needs faster growth, real sales from AI product, and lower pressure from employee stock plan. Thank you for watching my video today. I'll come back with another great market insight and interesting stock story. See you in the next video. I'll be back.